Broadcom has become a major force in custom AI silicon and data center networking. The question is whether that breadth and cash generation can keep the company ahead as investor expectations rise. This is educational research, not financial advice. Please verify all data independently. Broadcom reported AI semiconductor revenue of $10.8 billion in fiscal Q2 2026, demonstrating that AI demand has become a major contributor to current growth. The central investment question is whether this momentum can continue at a level sufficient to meet already elevated market expectations for revenue, earnings, and cash generation. Broadcom operates through two main businesses, semiconductor solutions and infrastructure software. Its AI exposure extends beyond individual chips, spanning custom XPUs, Ethernet switching, optical components, network interface cards, racks, and integrated systems, which positions the company across multiple layers of AI data center infrastructure. Reported AI revenue increased from $8.4 billion in fiscal Q1, up 106% year-over-year, to $10.8 billion in fiscal Q2, up 143% year-over-year. Management's approximately $16.0 billion fiscal Q3 AI revenue outlook indicates further acceleration, but this figure remained guidance rather than reported performance as of the research cutoff. Fiscal Q2 revenue reached $22.187 billion, a 48% year-over-year increase, led by 79% growth in semiconductor solutions. Broadcom also reported a 69% adjusted EBITDA margin and $10.262 billion of free cash flow, illustrating the earnings and cash generation capacity supporting its investment in AI infrastructure. Broadcom's partnership with Meta supports the MTIA custom chip and Ethernet roadmap through 2029, providing an example of its long-term role in customer-specific AI infrastructure. Custom silicon may strengthen customer integration while expanding Broadcom's content per AI cluster through associated networking, connectivity, and system components. Infrastructure software contributed $7.178 billion, or 32% of total fiscal Q2 revenue, giving Broadcom a substantial business outside semiconductor sales. However, software grew 9% year-over-year, compared with 79% growth for semiconductor solutions, meaning near-term growth was much more heavily driven by the semiconductor segment. Customer concentration remains significant, as one distributor accounted for 42% of both fiscal Q2 and first-half revenue. Broadcom also carried $64.907 billion in debt, with derived net debt of approximately $45.279 billion, creating a financial consideration even alongside strong reported free cash flow. AI infrastructure deployments can be uneven, and the approximately $16.0 billion fiscal Q3 AI revenue target had not yet been reported at the research cutoff. In addition, a larger mix of AI rack and system sales could place pressure on gross margin, even if operating leverage supports profitability elsewhere in the business. The bull case combines exceptional reported AI growth, substantial cash generation, and Broadcom's breadth across custom silicon and networking. The bear case centers on concentrated revenue, material debt, uneven deployment timing, margin mix, and the risk that elevated expectations leave little room for execution setbacks. Broadcom scores strongly on AI relevance, revenue momentum, profitability, and cash generation. The evidence is more mixed on diversification, while customer concentration, valuation visibility, debt, and execution requirements keep the overall risk assessment elevated. Broadcom is a major AI infrastructure supplier with exceptional reported growth, supported by semiconductor demand, custom silicon, networking, and substantial cash generation. The key test is whether the company can convert AI guidance into durable, diversified, and profitable revenue, while managing customer concentration, execution demands, debt, and valuation risk. Like and share. Then visit AIStockshub.com for more in-depth research.